All right, so today's presentation is going to get started here. We always start with our little disclaimer slide because everything is changing so fast. And so what we're going to talk about today is where we are now. And who knows where we'll be tomorrow or next week. When we started this round of presentations here at CBM, we were putting out the information, most of which is the same today, but already saying we think there's something coming that's changing, which is true. And so we tried to incorporate that here in the slides today. And so to get started, I wanted to let you know what we're doing here today, which is, of course, the more on the Paycheck Protection Program loan forgiveness, especially for small businesses. And we're also going to cover the Flexibility Act that just came out to the extent that we can. That stuff's still changing as we go, but that's where we're going to start. I'm Angie Prochaska, and I am Director of Professional Development at CBM. And today joining us is Brenda Haase, who is also a CPA and tax manager for us at CBM. And of course, Tom Hudson, backed by popular demand, CPA, PFS, CBA, and Tax Supervisor as well. So we've done a lot of these seminars, not just the three of us, but throughout the firm. And so we'll get started and we'll take it from here. One of the things that we wanted to show, and I know some of you can't see the slide, but recently, CBM appeared in the Washington Business Journal's May 29th Small Business Big Mission feature as part of ongoing efforts to support our small businesses and nonprofits throughout the DC area. And in particular, they highlighted all these different virtual meetings and training sessions that we have had for all these different sessions. So there's definitely been a lot of them, and hopefully everybody's getting what they are looking for in terms of learning about all these things. We certainly have gotten a lot of questions as we've gone through the process. We're going to try to incorporate them. We're going to play the piano. We're incorporate those questions as we go through the session today. Some folks have sent us some information ahead of time, and those are the ones that we're going to try to answer as we go. For those of you who are participating online on the Skype app, in the left column, you will see a section where you can ask questions. And that's why we had Brenda joining us today to help sort of guide that queue and answer questions as we go. And so for now, we will get started and we'll see, all the different information that we've got. We've got a lot of calculations to go through and a lot of information to get into. So the slide we have up now is regarding our resource center for the COVID-19 materials. It's easy to find. If you're online, you're not sure what the website is. If you just go to our website at cbmcpa.com, there's right at the top of the screen, there's a COVID-19 link where you can click on that. There's lots of good information in there. A lot of the information from all the different sessions that we've had so far. We have blog posts there, and we have information about other upcoming sessions that we're going to do, including one that is tomorrow. So if you can't get enough of it today and you want to hear it again tomorrow, it's similar. Tomorrow's directed a little more toward the automotive industry, but we're still covering a lot of the same topics. Okay. So today, an overview just to talk about where we've been and where we are now. Since it changes so fast, we want to make sure we sort of give the history a little bit and then also talk about what's coming down the pike, or at least what we think is coming down the pike. So the CARES Act was passed March 27th of this year amidst folks worrying about keeping their folks paid. And so the Paycheck Protection Program was the biggest piece of that, or the one that interested the most people to try to keep everyone paid, and learning how, first of all, how do I get the money? How do I submit it? And so once we got through that, we got to May 15th, they released the forgiveness application. Of course, that's what everybody really wanted to know, is once I got the money, can I keep it and do I have to pay it back? And so it seems that as we go along, and then so many industries were still shut down, and specific companies and whatnot, there was a lot of worry about being able to meet all the requirements on the forgiveness that was required. So right in the middle of this round of our sessions, the Flexibility Act was signed June the 5th. And that released a lot of information, some of which we're still digesting, some of which we still don't have full information on. And it was right in the middle of our different sessions here to different niche groups. And so we're trying to make sure that we incorporate all that into what we have been showing. And so today we have, the changes that we're going to do. You still have to go through the math that we've been talking about. There's no way to get out of that for sure. But a lot of the concepts are really the same. So there's not a lot of difference between what we were doing before and what we're doing now, but maybe some of the names or the dates have changed. Sounds like a secret movie or something. The names and dates have changed. So here we go. So the big changes that happened in the Flexibility Act was really just some of those statistical type changes. 8 weeks is what the prior plan had provided for, and a lot of people said there's just no way, I couldn't even get opened in 8 weeks. So that is one of the biggest changes, is that the time period has changed from 8 weeks to 24 weeks to get the spending done. And also in a big way, the changes on the ratio of how much of it has to be on payroll costs. Previously it was 75% had to be payroll costs, and now it's gone to 60-40. 60% still needs to be on payroll, since it is the Paycheck protection program. They're really trying to make sure that people stayed paid during all this time period and try to get the economy back on track. The other thing that changed is the deadline for your FTEs. How long do you have to keep people on board? What's the deadline? June 30th. We'll be here real quick. So that's been moved to December 31st. The next question is about, item is on 2 to 5 years is the change in the loan term. Previously it was you could pay the loan back in 2 years. Now it's up to 5 years. But what we're seeing so far is that you have to ask for that. It doesn't just automatically go to 5 years. If you want to do that, if you get to that point where you do have a piece of it or all of it that you need to pay back, then you communicate with your bank about that and make sure that you say you'd like to change the time period to pay it back if that's what you're interested in. The rate is still 1%, which it was before. Another item that was added is that you're allowed to defer the payroll taxes on the PPP borrowers that receive loan forgiveness. And previously that was a prohibited item. And now they are allowing for that payroll tax deferral, which should help some people as well. Okay. Let's see. So the last item that we're going to talk about is you're also allowed the deferral of all your payments of principal, interest, and fees until the date on which the amount of the loan forgiveness is remitted to the lender by the SBA. So some people have asked the question, if I'm ready at 8 weeks, we've gotten several questions about that. Can I go ahead and file for forgiveness? And the answer is yes, you can go ahead and file using the previous 8 week period. And if you don't file, then within 10 months, going to be at the end of the covered period, and you're going to be paying it back because you didn't apply for the forgiveness at all. So just keep some of those dates in mind as well. Okay, so for the loan forgiveness, the application originally was released by 15. We still have that application right now. There is a new application coming. It's not even out yet. So we can't address specific things about what will change or what it will look like as compared to what it is now. But we'll address the pieces that we know of as far as the calculations go as we go through today's presentation. So there's going to be a lot of documentation, and everybody says documentation is key. You've got to turn in all of the things that you use to come up with your various calculations so you can prove them out. Makes it easier for the folks that are reviewing your application to make sure that you have all the information and it'll go through smoothly. If they have a little more than they need, that's never a bad thing. We also got some detailed instructions with that, and that's what Tom's going to go through in a little bit here as far as how do I walk through that application.
Angie, one question that we received was how long does the process take for applying and receiving forgiveness?
So I've heard various things in terms of how long it takes to fill it out. And I heard some laughing even today on the presentation because I think a lot of people laugh at how long it will take. The math is pretty simple, but if you have a big payroll, it's going to take a while to go through the process. And so they've given some guidance on that, but I'm not sure it's really relevant. But in using some of these steps, hopefully we make it clearer and easier to go through. As far as how long it takes to get it back, I think the SBA has 60 days. And so it is going to take a little bit of time before you get information back. It's not going to be immediate. And to that point, a lot of folks have asked, when should I file? And the answer in that case is, for the most part, right away. Because as soon as you can, you want to go ahead and get this calculation done. If you decide that you're not going to meet the requirements and you're going to have a lot of the loan not forgiven just per the calculations that you do, first of all, you can run the calculations at 8 weeks and say, it's not looking so good for me. Run it again when you get to the 24-week period, and then you can file it that way. But it's either way is going to work. And so if you decide that you're not going to be able to have a lot of loan forgiveness, you may want to wait to file it, because then the payment for your loan starts a little bit later as well.
And Angie, you can apply any point, right, along that continuum between 8 and 24
Correct.
weeks, right?
Correct. And I believe you can only do that for the 8-week period, because if you got through the 8-week period and decided that that was good for you, as you go forward into the 24 weeks, you may say, you know what, this isn't getting any better for me. I'm going to go ahead and go at the 8 weeks. And I know several of the questions have asked that, what about people that leave after I get the loan forgiveness and things like that? There's nothing that I've seen. Correct me if I'm wrong, if anybody else has seen that, but basically this is a finite thing, and once the forgiveness is taken care of, then you're done. And so some people are saying, well, I may not be able to hang on to everybody, but I've got them right now. So your 8-week period may be all you need, and you may just roll forward with that. If you're going to do the 24-week period, you got to get those expenses and do those calculations at the 24 weeks. Okay. Let's see. So then another big question has come out, and where there's questions, there's always some wrong assumptions. But there's this $2 million figure out there for the audit. It's basically saying you have to certify that you, in good faith, you said, I needed this loan. And basically under 2 million, they're saying it's assumed that you did need it. Over 2 million, not as much. So, and the other thing is they said the folks that are over 2 million will be audited, but that's not to say that anybody else couldn't be. So the main thing is you want to get your documentation, dot all your I's, cross all your T's, make sure you have everything together that you need so that you can answer any questions either through the application process or if someone comes back to check after that. Okay?
Yeah, Angie, just one quick interjection here. A lot of people seem to be throwing around some of the covered period lengths in the questions here. Some people are asking 9 weeks, 10 weeks. If I use it at 12 weeks or 16 weeks, can I start to apply? You need to select, and I assume this will be more clear when they come out with an updated application. It needs to be either 8 weeks or 24 weeks, and those are specified covered periods, and those are the lengths that are going to have to be required for those. So you're going to have to make sure that the funds are either used in the 8 or the 24. You can't elect anything in between and say I use the funds in a 16-week period. But I imagine if you did use them that quickly, then a 24-week period, you would at least qualify for forgiveness. But just to be clear, those are the two options, 8 or 24.
Right. And so if you did, so I think some people have also asked the question, and maybe this is some of the confusion as well. If I'm at 10 weeks, can I go ahead and file for the 8-week period? Yes. So that's the distinction I was trying to make. You don't have to wait beyond the 8-week period, but you can have a few extra weeks just to get your things together and get it all filed, but you're still using the 8-week period, like Tom.
Yeah, and I think people are a little unclear on what the timeline is, and the new law, the Flexibility Act, kind of changed that. Before, there wasn't really a defined timeline. Now there kind of is when they added that 10-month window. They want you to, whatever the end of your covered period is, whether that's 8 or 24 weeks, they want you to apply for forgiveness within 10 months. Otherwise, they're going to start requesting payments on the loan. So that is the finite timeline. That's when they want you to start getting your loan application in, your forgiveness application. So that's what you have to be considerate of, but there really is no reason to wait unless you are perhaps looking at any type of reduction that you could potentially remediate by the end of December 31, 2020, which is a snapshot in time when they're going to want to look at your employee levels or your salary levels, whichever reduction you may be facing. We're going to get into that a little bit later, but I just want to make that clear right now.
Good. Thank you, Tom.
Sure.
All right.
Yeah.
So I guess I was going to cover a little bit of this, and then we are going to switch over to the specifics of it. So this is just a quick refresher on the eligible expenses, and really none of this has changed. The payroll costs are still the payroll costs. It's just the amount that you have to use for payroll has changed, and the length of time perhaps. So the payroll costs are still capped at $100,000 per employee. What are payroll costs? Salary, wages, bonus, tips, gross commissions, severance, all your PTO, healthcare provided by the employer, and the retirement provided by the employer, and that is to say for the employees, not the owner.
Yeah, so it can get different when it comes to the owner, but for right now we're focusing on employees, and their payroll costs, they are capped at $100,000, but that's any gross payroll that you end up paying to your employees. So all those salaries, the wages, bonus, tips, commissions, all of that, and actual compensation is capped at $100,000. But when you start talking about the healthcare benefits and retirement benefits, that is outside of that $100,000 cap. So everyone needs to be cognizant of that when they're working through these calculations and filling out the application.
Right. And the last item on that list was just the state and local payroll taxes for the employer. In other words, state unemployment taxes and things like that. Okay. And so, and there's some variations, like Tom said, as far as the owners and the employees, but that's the basics there.
Yeah, we do have someone commenting. I'm sorry, Angie. We should fix this slide. It is a little misleading, but the cap for $100,000 is only on the gross pay that gets paid to the employees. Some of the other items that are listed in that list, such as the state and local payroll taxes, the healthcare benefits, retirement benefits, are outside of that $100,000 cap. So I want to make that clear for everyone listening that this slide is a little misleading the way it's written.
Right, and I think that's helpful too, because some people have said, what about things that are deducted from the wages. And that's looking at the wrong number. We're at gross wages on that starting point. It's not the net cash you're paying to them, because depending on their withholding, it could be any number, but it's really all about the gross. And then, as Tom said, stop at 100,000, but then you can tack on a couple of those extras for the health care.
And everyone's talking about, a lot of the non-payroll items. They've kind of expanded upon what's included in there: utilities, gas, water, electricity, transportation, the rent. They're just worried about a lease agreement, the mortgage interest. I haven't seen anything. I saw someone asking, and it's been asked multiple times, about floor plan interest. There's been no expansion upon whether or not there's actually included. I'm leaning towards it looks potentially like a no, but that's not definitive yet. But utilities, a lot of people always focus questions on this. Well, can I include my cell phones? I mean, it says telephone. The et cetera is added into the actual words in the application and things like that. So people have been wondering, well, what is included in that beyond the items that they specified? We've been kind of suggesting that, hey, as long as this was in existence and it kind of falls in that category of whether or not it's a utility, then maybe we try and count it, but you shouldn't rely upon it entirely to achieve that level of forgiveness. But it will come down to specifics and what the banks decide, and if there's any further guidance from the SBA.
Agreed. And also in terms of the rent, I even saw a question just pop up about rent on what? So we say under a lease agreement, it has to have been in existence prior to February 15th, but it's it can be for the place that you are renting, the real property, or it can be for personal property. I've seen people ask about postage leases or other copiers and things like that. That's all part of the same deal.
And here's another list of items that we received questions about. I mean, people were talking about bonuses, hazard pay. For everything we've seen, these can be included. It's been specified that bonuses are allowable. So if you somehow work a bonus into the covered period utilizing the payroll protection funds, then that should be allowed. Everyone asks about retirement payments. There's been a lot of questions, at least that we've been receiving, about maybe 2019 retirement contributions that just haven't been made yet. I think it's been kind of unclear whether or not that can be included. I don't want to lead you one way or the other because there isn't anything definitive. Personally, Tom, my opinion is maybe that does qualify because incurred or paid, we're going to get to it in a little bit, it kind of meets that language criteria that's been set out by the SBA. So it's something to consider. People ask about 1099 employees. We get this question over and over. Those people cannot be included in your eligible expenses. They should have been applying for their own separate PPP loan if they were a 1099 employee who is working for you or various other organizations. They'd be technically self-employed, and they'd have to go down that route themselves. People have talked about transportation expenses. We always get this asked, lease vehicles and gas that's used for business travel. We've seen that they can be included. It's not specified, but it's something that has been asked about a lot. We think it can be included. Rent, even if it's paid to an affiliated company. Again, if that lease is there, then that's something that we feel is eligible, even if it is related party. Compensation for somebody who has, the qualified sick or family leave wages. Those payroll tax, if there is taken, that's something that you have to worry about, and you have to think about whether or not to include it in the forgiveness. And if you're taking that credit, I don't believe it's included. So let's start off, and I see tons and tons of questions flying in. A lot of these are going to get addressed here as we start to work through some of the slides. So if we could just, we're going to work through those, and then we can get to as many questions as we possibly can. But first, let's talk.
There are a lot of questions about owner employees, which we're going to get to, as you said. And there are questions about clarification of the taxes. So it's only state and local payroll taxes, not federal withholding, as Angie mentioned, or FICA, or those types of taxes, right?
That's correct.
Okay. And unemployment and workers' comp.
They can be included. It was the employer portion of the payroll taxes which cannot be included. That's the one thing that's been separated and isolated out.
Okay, thank you.
Yeah. A lot of the questions are great questions. I love to see, and we're going to get to a lot of them. You guys are really focusing on a lot of the issues that we're struggling with ourselves and trying to interpret. So we're going to do the best we can to answer those. But moving on, I just want to start, we're still in the refresher phase of the presentation. There's some things that we want to cover first. First, there's average FTE. We're going to need to know how to calculate this in a little bit, but the way you arrive at this number is by finding the average number of hours worked per each week by each employee and dividing it by 40. So this is for the covered period, whether you end up using 8 or 24 weeks. We actually did have one question come in from the audience saying, hey, my standard work week is 37.5 hours, but the instructions for at least this first application that's been provided to us, they specifically say you need to divide by 40 hours. We don't really feel like in that circumstance that you should be subject to some type of reduction just for having a shorter standard work week that's less than 40. But the rules don't specifically have a clear way of handling this particular issue. So as usual for that, we're going to have to wait and see if there's any clarification. But how you arrive at them, we're going to get into it more with an example. But it's average hours worked weekly over the covered period, and you divide it by 40 hours, and you assign them a value. Next, we also have the different payroll periods. There's been a lot of discussion on this now that they've changed it and made that 24 weeks an option, but you have your covered period and you have your alternative payroll covered period. That's the APCP is what we're going to call it. And that's available to align the APCP, to align your payroll processes with the covered period. And they were trying to add a little bit of simplification so that your payroll period can also be your covered period. And they're just trying to make that math a little bit easier so you don't have to accrue wages in and out of the period or run into any issues. And it's generally for just administrative purposes and just ease of use. This is something you're going to have to know when you select and fill out the loan application. So we just wanted to bring attention to it now. There's 2 periods. You can select one, and this is either 8 or 24. So just know that those are there and those are your options. Also, do note if you select the alternative payroll covered period, you have to use that for all your payroll calculations. And you'll see as we get through the rest of the presentation that there's a lot of certain calculations that we're going to run through that do focus on this covered period and make reference to it. So if you do select the alternative period, that's what you're going to have to stick with for the purpose of those calculations. At a high level, how does this loan forgiveness work? I mean, we're keeping it high level right now because a lot of the details, they're working themselves out and they just got changed on us. So there's still a few pending questions, and we're going to get to some of those. But high level, you need to spend all the loan proceeds on the eligible expenses. Those are all the things we went through on the prior slide, what's included. I know there's a ton of questions about what about this, what about that. To be frank, there's not a lot of answers regarding unique and special situations, but I think it's pretty clear what can be included in payroll costs and non-payroll costs, except for the ones that kind of we're waiting for more guidance on. And the rumor is that SBA and Treasury have tons of guidance to drop on us relatively soon. I hope they do it, and I hope a lot of these questions about maybe the small items that could fall either way, where do they fall in this loan application and the forgiveness? Next, high level. You need to spend the proceeds on the eligible expenses that are incurred or paid within these covered periods. So again, whether 8 weeks or 24 weeks, incurred or paid. That is the language that's provided in the interim final rule and on the application, and that's what a lot of people have been focused on. I want to be careful here because this hasn't necessarily been decided either way, but the speculation is that if a payroll cost was incurred the month before you receive your loan proceeds, say that was in April, and you receive your loan on May 1st, but you don't cut a check for that April payroll until May 5th, is that payroll included under the definition of incurred or paid, and then therefore would help you achieve or be included in that calculation towards forgiveness? Some people say yes, some people say no. If you ask me personally, I think it may. This hasn't been specified, but the language seems to infer that, and this is another item that everyone is really kind of hinging their hat on and waiting for SBA to say, yes, that's possible, because they did that on the end of the payroll period. They said incurred or paid. So if you have a payroll that's kind of wrapping up, whether it's 8 or 24 weeks, near the end of your covered period, and the pay date is going to fall outside of the covered period, but the pay cycle actually is somewhat capturing the end of that covered period, you would accrue how many payroll costs that you incurred, whether that is half the payroll period, say it was 14 days and 7 days made it in, then you would accrue 7 days of the 14 days, and that could be included in your calculation for loan forgiveness, as long as you don't make any changes with the payroll date, they want you to go ahead and make that payment as regularly scheduled. So that is something to be aware of, that you still have to make that payment. 3, you need to spend at least 60% of the loan proceeds on the payroll costs. This was 75% before. That was SBA flexing their muscle and saying, hey, we want 75% of the loan proceeds spent. Congress didn't like that. They said that's too much. That's too restrictive. We want to loosen that up. And so that was part of the logic behind this Flexibility Act. They came in and said, we think 60 is appropriate, so therefore the new ratio that you have to follow is 60% of loan proceeds on payroll costs, 40% on the non-payroll costs. There was a lot of speculation when the language first came out that it says you need to spend at least 60% of the loan proceeds, and it was very specific, and it kind of inferred, hey, if you don't hit 60 and you're at 59, then you don't achieve any forgiveness at all. Congress has been made aware of that, and a lot of them have spoken out and saying, hey, and actually the Treasury and SBA announced just yesterday, that's not how you read this. We want you to know that partial forgiveness is available in the event that you don't reach 60% of payroll costs. So just bringing that up, it looks bad for a second, but it appears that partial forgiveness is still possible as it was before when it was 75. All right. So again, a high level here. There's going to be possible reductions to your forgiveness, okay? In short, if you didn't reduce your salaries, if you didn't reduce your headcount, then you shouldn't experience any reduction. If you did any of those things, then you have until now, it's December 31st, to restore to your previous levels. We're going to get into the FTE reduction, and we're going to get into this hourly and hourly wage reduction. Salaries is pretty cut and dry. If you paid them at least 75% of what they made before all of this pandemic and before everything went down, then you should be okay. FTEs, if you didn't lay anyone off, if you kept your workforce, and you're not subject to any reductions, it should be relatively easy to skate through. And you shouldn't have any issues regarding that reduction. We're going to get to that high level. That's what it looks like. So the application, let's think about the application. It's hectic, okay? And it was hectic before, and now they've kind of made it easier to achieve loan forgiveness, but they've created a lot of questions surrounding how it necessarily works now, because we had the application before and we had a clear idea of how we think it would work. There were still questions as usual, but there's going to be some things that you're going to want to get together, and this is what you're going to need to fill out your loan application. You're going to need all those identification numbers. One was assigned to you by the SBA, and then your lender has a PPP loan number. You need to gather all of that and get it together because it's going to be going into the first part of the application. You're going to need the date and the amount your loan was dispersed to you, so you're going to have that available. Of course, I'm sure a lot of you have focused on that date, but you're going to need it. You need to track how many employees you had at the time of the loan application and the number of employees that you had at the time of the forgiveness application. Again, this could be subject to change, but I think these are relatively basic pieces of information that the SBA is focused on obtaining, so I feel like they'll probably still end up being there. You need to indicate if you received any EIDL advance amount, if you did receive one, and note that this is only on the advance grant amount, so that was the $10,000, $1,000 per employee. That's what they're focused on. If you separately received an EIDL loan, that's not the amount that you're putting here. They're focused only on the advance. You're going to need to indicate your payroll schedule. This is how often you pay your employees. This will help the SBA kind of understand where your payroll is at, what your cycle is, and it can help them better understand when payroll costs are incurred and paid or incurred, and thus help you eligible for forgiveness. Again, we covered the covered periods. We discussed that. There's the two options, the covered period and then the APCP, so that could be the alternative one that fits to your payroll schedule. You need to be on a bi-weekly or less or more frequent schedule in order to utilize that. I didn't mention that before, but again, they changed this from potentially 8 weeks to 24 weeks, and I know there's a lot of room in between, but 8 and 24 is what they have stated and specified needs to be the actual period. So in general, that's what you're going to need in order to get your application ready to go. I know this is small, but we just wanted to throw in the application. That's what it was, okay? We had it just last week before the weekend. You know, that's what it was looking like. And there's going to be a new version upcoming that incorporates the new changes from the Flexibility Act. But There was quite a few pages, quite a few math, calculations involved that you're going to have to run through. They kind of made it easy so that you do a lot of the work up front, and you're going to be working mostly on a lot of the sub-schedules that they provided in the application to figure out all your employees, their compensation, and what costs may be eligible for forgiveness. I do want to give a shout out probably to a lot of the payroll companies. I know they have a lot of great reports that probably will help you figure out all of this, and I'm sure they're just watching as closely as we are regarding the upcoming application and the updated application coming from the SBA, at least so we can tweak anything we need to do just to get everyone the information they're going to need to fill out the application. So just wanted to show it, make it available. It does provide some good information about maybe what the SBA is thinking about, what they're focused on. So it does have value, but just know that it is going to be changed to incorporate the Flexibility Act. As you look in the application, you're going to see there's tons of pages. It's 11 pages long, which is already kind of frustrating, but if you look at the directions, you're going to see what they're going to start guiding you through. I mean, you're going to start with this Schedule A worksheet, and I'm assuming that name's going to still exist. This part shouldn't exactly change because it's still in line with the terms of the program, but you're going to list all of your employees, and this is Table 1. This is for all your employees who weren't subject to a cap of $100,000. You're going to add them in here. You're going to list their name. You're going to list their SSN, and you're going to put their cash compensation. We're also going to get into average FTE and any type of salary reduction that they could potentially be subject to. It goes here in this chart. But what is an FTE? Let's focus on that. We briefly made mention to it before, and we're going to get into it. I know this is one that everyone talks about because they had problems getting employees back. They had problems with people coming back to work, wanting to come back to work. People left, just for a new job. All different types of situations could have happened, at least during all of this hectic time that we've all been through. But we need to look at what exactly does an FTE mean, and we need to calculate that the average full-time equivalencies you had during the covered period or the APCP, whatever that ends up being, 8 or 24 weeks. The math is still the same. So how do you do that? Well, first you need to look at the average number of hours that each employee worked per week, and you divide it by 40. That's the math. I referenced the question before, hey, we have a different work week. The instructions right now say that you need to divide by 40. I'm not exactly sure how you account for having a non-standard work week. But there's been a lot of definitions. I see some questions, people asking, well, I thought FTE was this or that. There have been multiple definitions as to what an FTE is, and also through this process it has changed. When you calculated your number of employees, when you submitted your loan application, you used a different definition as to what an FTE was. That loan process application was actually everybody, anyone who works for you. I don't care if they work 12 hours a week or 40 hours a week. We're counting them as a person, and we want them included in the application. Well, now they're like, hey, when we calculate FTE, we want to divide by 40, and 40, if they worked an average of 40 hours a week, you divide by 40, then the maximum value each employee can get is 1.
So, Tom, this is the SBA's definition of FTE. So if there are other definitions, such as using 30 hours, they obviously are not applying in this case.
Yeah, the application was very specific. We're going to calculate an FTE this way. I know a lot of other practitioners were started when they first saw FTE chasing down different areas of the SBA code and the IRS code and looking into, well, let's try to figure out, a lot of people, I see it in the questions now, hey, 30 hours was what they considered full-time employee for Affordable Care Act. And that's the problem with this, or at least an issue with this rollout was FTE. Wow, and I know a lot of you are a part of different organizations who may even have a different stance on how to figure that out. But for the purpose of this application, an FTE, we're going to divide by 40 hours and assign them a value. 40 divided by 40 is going to be 1. So if someone worked 40 hours through the covered period, whether 8 or 24 weeks, they're going to get a value of 1. The instructions instruct you to round to the nearest tenth. So if somebody's at 30 hours, that's 30 divided by 40, it's 0.75. We're going to round that to a 0.8. So they're going to have a value of 0.8. There was conflicting information because in another section they told you to put 0.75 for the circumstances, 30-hour work week for somebody. So that will probably be addressed as a small error, but for the purpose of the application, they say give them a value and round it to the nearest tenth, and that's how you're going to total up all your employees and get to the number of FTEs that you have. There is an alternative calculation. They make one easy. They say, okay, there might be a lot of people who have employees running through who maybe they work all different kinds of hours. You know, it might make this math a little complicated. Just know that there's one default one that you can do. Anyone who worked 40 hours, you're going to give them a 1. Anyone who didn't hit 40 hours, you're going to give them a 0.5. Both of these options are available to everybody, and I assume that this will still be the case because nothing has significantly changed regarding this specific area of the application. But you need to figure out which one of these produces the highest FTE number for you, and that's what's most important. We do have a quick example. And this is very easy. It just shows the differences between the two methods. You got A, B, C, D, and E, and those are different employees, and they work different hours, different numbers of hours during the week, 45, 40, 28, and then 2 of them at the end who works 20 hours per week. You can see using both of those methods, you arrive at 2 different values for an FTE. If you use the traditional method, the first one that suggested you arrive at 3.7 FTEs, and you can see that the kicker there, the one variable between the two options, is person C, who works 28 hours, who gets a value of 0.7, versus in the alternative method, we're just going to give everyone who doesn't work 40 hours a 0.5. You'll see that they get, in this alternative method on the bottom right-hand slide, they're going to get a value of 0.5. So you end up with a lesser value of FTEs. In this case, the first method would be more favorable for all of your calculations because you want that higher number of FTEs employed during the covered period. Alrighty. So as we spoke about before, there's a safe harbor, and this is one of the things that changed with the Flexibility Act. If you had to reduce your employee counts for whatever reason, then you can potentially be saved by this safe harbor and not subject to any type of reduction. So all that math that we did before, if it ends up like you're looking like reduction, there is a way to get out of it. First, you need to look at what your FTE count was during your covered period. Again, that's either the 8 weeks or the 24 weeks. You need to do the math, and the math is relatively the same. It's just over a longer or shorter term. So these are things that people are going to have to weigh when they start making the elections over what type of period that is most beneficial for them. But you need to look at those 2 windows that I have listed here on the slide. So that's the period beginning February 15th, 2019 and ending June 30th, 2019, or the period beginning on February 1st, or January 1st, 2020, and ending February 29th, 2020. You need to look at those, and then you could be subject to a reduction. If the FTE count is less, the one we just calculated before, than either of these 2 windows.
A question, Tom, does it have to be the same time period for all employees?
Same time period. I'm guessing that means the covered period, and yes, everything indicates that the covered period would have, it's an all or nothing decision, and it's going to have to be for everyone. You pick 8 or you pick 24, and that's what you're moving through for the entire application. It'll be interesting to see where they do put it on the application, if they make it out front. So something you have to decide in the beginning. I'm really curious to see how they structure that. But again, all of this is changing. We thought we had a good idea of how this was going to work, but with the Flexibility Act, we can't really speak to what new windows might be added. I speculated and discussed with some of my colleagues that, hey, I think there's a potential here to add more reflection periods to look at. Remember, the goal of all of this is to achieve that forgiveness. That's why they added this Flexibility Act. They're trying to make it easier for everyone. So I give them the benefit of the doubt and think, hey, they're going to make all these changes so that we can help more and more people achieve that forgiveness amount. So stay tuned. It's changing every night. It's really interesting to watch, and we're having fun doing it. But back to the FTE reduction. I know these are a lot of dates, and I apologize. It's a lot of things to work through. High level, if you didn't have a reduction in employees, then you're not subject to any reduction and you should be okay. Again, high level, if you did have reductions, you have all the way until December 31st in order to get them back. And that's a hard date. All of the language in the bill says December 31st. So everyone's talked about, hey, if I think I'm good, before waiting the whole 24 weeks, I think I achieved it in 8. The bill actually changed the language for safe harbor to December 31st. So if you ran into reductions, you may actually have to end up waiting until December 31st to achieve that specific safe harbor. So it's just something to think about. And while we're walking through this, we're going to get to exceptions. I see some of the questions asking about, hey, I had this, I had that. Replaced workers, resignations, that does come in a little bit. But high level, there's a lot of windows you have to look at. If you ended up employing two little folks during the covered period, compared to all of these different windows, there's two. And then you move on and you look at two more windows, which is February 15th, 2020 through April 2020, and then also whichever payroll includes February 2020, February 15th. So whichever payroll cycle of yours includes that date. Then if the number of FTEs for that period is less than the FTEs for the second period, then you need to look again at the next two periods. And then if you don't reach any type of substantial, if your FTEs are still lower in your covered period, then you still have to wait till December 31st. I know that's a lot of dates. That's how it works. So let's talk about it. There are exceptions. Everyone's asking about these because I know everyone's run into these problems. I had employees, that didn't come back to work or quit or were fired. So the program tries to account for a lot of these problems here with FTE reduction exceptions is what they call them. And there's a row at the bottom of Table 1 that allows you to put in values for employees who meet these reduction exceptions. This includes ones who are turned down your offer to return to work. So if you did lay them off and they went on unemployment and they decided they liked that more when you offered them their job back, you need to be clear to document that. There are some stipulations about reporting that to your state's unemployment agency. Some states do have that requirement, so that is specific, but I just want everyone to know that's out there. But if they didn't come back, you don't get penalized for that, and they get accounted for in this Table 1. You're going to be able to put a value for that, and you don't get penalized. That's the big thing. So there's employees who are fired for cause. You don't get penalized. If that's all documented, make sure you have everything to be able to prove that that was actually the case. If they voluntarily resigned or went on to a different job, or they actually voluntarily requested, hey, I need less hours because I have obligations at home, you're going to have to take care of those, and they give you the opportunity to do that. Written documentation is the important part. Further, there was a big change, and this is probably one of the biggest parts of the Flexibility Act, that expanded upon the number of exceptions possible, and they tried to account for even more situations. First, they added the broad term that if you had the inability to rehire individuals, you do not get penalized. I understand that that's very broad, but I think they're trying to give everyone the benefit of the doubt and trying to account for the circumstances that we're all in right now and saying, if you had trouble bringing people back, we're going to look into giving you an exception for that. If you couldn't find highly similarly qualified employees or unfilled positions before December 31st, they're not going to penalize you for that too. Again, this is all going to come down to your argument and the documentation that you have. Maybe someone with a unique or special skill set who left, got a new job, and had to get rid of them and fire them with cause, something along those lines. It might be difficult, very difficult, to replace that person under normal circumstances, and of course it would be more difficult under the ones that we are now. So there's an exception for that. The largest one here, and this was a great point in the Flexibility Act, was if you have the inability to return to the same level of business activity that you were at before the pandemic due to all of the restrictions imposed on us by the Secretary of Health and Human Services, the Director of the Center for Disease Control and Prevention, and they tried to cover a lot of the authorities, and this is all the way through from March 1st to December 31st. You may not be penalized. That's very broad, but think about, I think they're thinking about restaurants here. That was one of the big goals of this program, is to help restaurants. If they shut the restaurants down during this whole period that was mostly your covered period, and you had to, of course, lay people off because you weren't even open, et cetera, whatever the circumstances were, if they were imposed by the laws and regulations set upon us by the federal agencies or state and local governments, they're going to cut you a break. There's still more information to come on how exactly this is going to work, but that is something that was included as a new item in the Flexibility Act, and they said, hey, we're not going to penalize you for this, and we're trying to work with you. So very important distinction. Salary and wage reduction. This gets crazy. This really does get crazy, and I'm not going to go into too far into it for the sake of time, but if you didn't cut anyone's salary beyond 25%, then you're not going to incur any type of salary reduction. And this is separated from any reduction in hours. Yeah, if someone works less hours, they're going to have a salary reduction in total as well. So they do bifurcate those items, and you don't get penalized twice if someone's hours went down and therefore their pay went down. They focus it on like a base pay. So what you're looking at is January 1, 2020 through March 31, 2020, and that's where they're looking at what the base salary was, and then they're going to look at your covered period to see if you reduce their salaries beyond 25%. That's the high level. We have a quick example. So John, he made $52,000, and we're using an 8-week covered period here. That's what he made in 8 weeks, $52,000, and that was his pay annualized for that covered period. But his annual salary previously, in the first quarter of the year was $80,000. The math there would be 52 divided by 80,000. That's about 65%. So they wouldn't, if they do reach that 75%, then no reduction is required. But you see here that we actually did cut their salary beyond 25%. So you have to do a little bit more math. You need to take their salary, multiply it by 75%, and figure out what you should have paid them. For John, he should have been paid $60,000. You only gave him $52,000. So you find the difference between those, you get $8,000. And then you divide that $8,000 by 52 and then multiply it by 8 to come at your reduction. We think this will change if you do select a longer covered period. I can't say for sure. I'm not sure this math will entirely stick when it comes to the next application, but that's what it is now, and I think that the core concept is going to remain. If you didn't pay someone their typical salary or decreased it beyond 25%, you're going to run into a reduction. But, hey, there's a safe harbor associated with this one too. There's a few steps that you can walk through about getting their payback. Again, this can get a little complicated as well. There's a lot of windows, just like the FTE calculation. But essentially, you do have an extended relief period as long as you get everyone's salary back to February 15th levels by December 31st, 2020. Again, kind of crazy in there, but that's the logic. I wanted to get into something that was kind of more focused on some of our small businesses, and there was relatively new development that came out that is really important for all the small businesses who are on the call, and it was from the most recent interim final rule, which is kind of the documents SBA has been slowly releasing to us that explains how to do a lot of this stuff, so we really look into these, and they had a specific definition or type of business owner and kind of took most practitioners by surprise. What it said was this: so for owner employees and self-employed compensation, or self-employed business owners, the amount of loan forgiveness requested for owner employees and self-employed individual payroll compensation can be no more than the lesser of 8 divided by 52 of the 2019 compensation, or $15,385 per individual across all businesses. You can run into problems if you are a member owner in multiple businesses or Schedule C in multiple businesses. They seem to limit this to you can only receive this once. If you had 2 Schedule Cs for whatever reason, you may only be able to achieve forgiveness under one of them, which was a big development. Again, this is speculation based on this kind of opaque section of the IFR that they added to us. And this logic applies to a lot of our Schedule C friends. So, as well as general partners and employee owners, and this can also be expanded upon to practically mean C Corp and S Corp owners. So, Schedule C filers, they're capped on their owner compensation, which was based on their 2019 net profit. That's what the calculation is based on, and there's a maximum based on that 8 divided by 52. Well, there's been a lot of speculation here too with the new 24-week period. Well, how are we going to do this for self-employed individuals? Because it was purely mechanical in the way that it works. There was less work, essentially, and if you were Schedule C, sole proprietor, your forgiveness was just 8 weeks divided by 52 weeks, and that's the amount that you achieved forgiveness for. There's speculation about, do I need to take the money out of the company, and we're going to get to that, but that's the mechanism for a lot of these Schedule Cs, and now with the change, we're kind of left hanging, well, how is this exactly going to work for them if you choose a longer period? I'm not sure if they'll be precluded from that or what, but we're going to have to go and we're going to have to pay attention and see. General partners, they also got lumped into this as well. So this has to do with partnerships. Their compensation, it's the 2019 net earnings from self-employment, and there's a few adjustments like 179 expense, unreimbursed partnership expenses, etc. And then you just multiply it by this decimal that they've provided as well. And that's the amount that they're going to have to look at in regards to their own compensation. And what's important to note is that these general partners and the S and C Corp owners, they're pulled out into a special section in the loan application, and there's special considerations for them. That was something that we didn't necessarily expect, and we were quite surprised by that. But one thing to focus on is forgiveness related to payroll costs. So for Schedule C, that's going to be 8 divided by 52, line 1 of the individual's 2019 Schedule C, rather than any of the amounts that are happening here paid or incurred in 2020. Again, I brought up, hey, is this going to change with the Flexibility Act? Are we going to look at maybe a different value for calculating forgiveness for self-employed individuals now? We don't know. One of the important stipulations is that health insurance and retirement plan contributions, it's not allowed for the self-employed sole proprietor, which is Schedule C, and general partners, because the IFR stated, hey, those expenses are paid out of someone's self-employment income. So we feel like the SBA, they were saying, we think this is already accounted for. So it's really cut and dry how sole proprietors, general partners are going to achieve their forgiveness based on that formula that they've provided. Again, does this formula still apply if you choose a different period? We don't know yet. We're going to have to wait and watch and see. So I got into, hey, there's this new stipulation, there's owner employees. They kind of threw this one on us. I just want to make it clear that their compensation is capped at $15,385, or the 8-week equivalent of their applicable compensation for 2019. This presents a few problems. If you're a newer business, there isn't exactly a mechanism that accounts for somebody who perhaps started here in 2020, at least for the sole proprietors. You have to be wary about what type of owners you have in your business and what type of entity you are. If you're a partnership, you need to look at whether or not health insurance and retirement plan contributions can be included for the partners. Schedule C, they can't include them. General partners can't include them. You've got your owners, C Corp owners. If you're a C Corp, all the shareholders, they're pulled out of the regular calculations, and they're subject to different types of restrictions. Their compensation is based on either 2019, the lesser of 2019, or that 15,835 number. So it's something 15,385. It's a very important point. There's a lot of murky details here, but I want to bring it into everyone's focus that, hey, if you are a general partner in an entity, if you're a shareholder or a sole proprietor, it's different and it gets complicated, and there's many more details that need to be explained regarding how your forgiveness is going to work. Twofold, because one, it's confusing in the first place, and two, the math may potentially change. So it's something to be wary of. We kind of want to bring attention to that. It's a much more complicated issue than we have time to get into. But wrapping up here, we just want to talk about documentation. When you submit this application, this is probably still going to be there. You make a certification that you submitted to the lender, all of the required documentation that verifies all your payroll costs, all the obligations, et cetera, to really prove that everything you put in the application is real. So that's going to include, and this isn't stated on the application, your bank account statements, third-party payroll reports if you have them, payroll tax forms, all of the different items that justify all these expenses for forgiveness. Over-document is the message that we're trying to send here. Lease agreements, utility statements, et cetera, et cetera. It's all there. You're going to need to provide that information to the bank, and they'll probably be very detailed when reviewing these applications for forgiveness. They have limited resources, but their fees are on the line, and that's the mechanics of this whole program. I know we are running close to the end of time here, but we do have some upcoming presentations. We have another one of these tomorrow that gets more into the details again about how this is going to work. And then we also have an investment update that's coming in July that has to do with top financial planning ideas in these turbulent markets. So if you guys are interested in more, please subscribe to that. Tomorrow we'll be running through a lot of the same content as we did today. And I know there's a ton of questions and we're running up to the end of this. Does anyone have anything else that they'd like to add? Okay, that's a no.
No, I think we just got to let people know that some of the questions that were submitted today, because of the time constraints, we didn't get to, which was not unexpected with the amount of folks online. So we want to make sure that if we didn't get to your specific question throughout the presentation, that we will still circle back. We'll go over the questions that were submitted ahead of time as well to make sure that we covered everything that we could. A lot of the questions just got covered in the natural presentation, but if you don't have your question answered, or if everything we just told you created a bunch of new questions, which is likely because it's still changing and we're still working through that, please reach out to us. We do have all of our names and emails listed on one of the slides in the presentation, and Joe is going to send out the slides to the folks that don't have the slides here to look at today. You're going to get those after the session, so you'll still have the information about our websites and our emails and whatnot. So please reach out to us and or whoever else at the firm you normally work with and ask your questions, and they will either answer them or send them on to us, and we can go through those and try to make sure that everybody gets as much clarification as we can provide during this time where, the answers are changing as fast as the questions. So.
All right, everybody, thanks for coming. If you need to follow up or you want maybe a detailed answer, we'll do the best that we can. Email us here. Here's our contact information. The slides will be sent out later today. I wish we could sit here all day and answer all these questions. I would love to do that, but unfortunately, due to our time constraints, we have to move on. So with that, we conclude the presentation. Everyone, I hope you have a great rest of your day, and good luck with the application and getting through the rest of this program. Have a good one.
Thanks, everyone.